Hello, good evening. Please confirm you can hear me clearly.
Yes, we can hear you loud and clear.
Once again, good evening. Text. Some of us have started me with the assignments. I've not been able to respond. I've been on an assignment that is taking my time between yesterday and today. However, rest assured that I'm going to respond to you on the assignment submitted, also with the solution. Please rest assured you are going to get response from me. It's been a very busy day today. All right, having said that, we shall be moving to another topic under modern costing system. For those that started this class with us, when we introduce the modern costing system, we discuss that as against the traditional costing system, the modern costing system is an attempt to correct some of the deficiency of the traditional costing systems. What are the traditional costing systems? We mentioned this. The traditional costing systems include the absorption costing and the marginal costing system. We now looked at the modern costing system. The modern costing system include life cycle costing. We have discussed life cycle costing. That is number one. Target costing. We have discussed target costing. Then activity-based costing. We have discussed activity-based costing. The number 4 item is the theory of constraints and the concept of throughput accounting. Tonight, we shall be discussing theory of constraints and the concept of throughput accounting. Under this topic, we are going to discuss what is the theory of constraints. What does this theory try to explain? Then we look at the concept of throughput accounting. Then we are going to discuss throughput accounting performance measure. Throughput accounting can be used to measure performance. How can we use throughput to measure the performance of a company's product? We are also going to discuss throughput accounting as a tool for decision making. How can we use throughput accounting to guide business decision making? Then we are going to round up our discussion with relationship between limiting factor analysis and throughput accounting concepts. All right. So we have itemized what we are going to discuss tonight, all things being equal. So our first discussion. What is the theory of constraints? Theory of constraints can be described as an attempt to maximize profits. When a company is faced with bottleneck operations, I'll take that again. Theory of constraint is an approach to production management. The theory of constraint is an approach to production management that attempts to maximize throughput return subject to bottleneck operation or bottleneck resource. It's an approach to production management that is aimed at maximizing revenue less material variable cost. The theory of throughput is that regardless of the nature of a company or the type of the product produced or the complexity of the business process, every company has a bottleneck, something that acts as limitation to maximizing profits. Even as an individual, certain things will serve as a barrier to achieving your goal. As a business organization, something could act as a barrier to achieving the company's maximizing profits, or a barrier that is preventing a company from making excessive profits. Every company will have at least a challenge that we always want to act as a bottleneck to achieving the company's objective. For most companies, the sales volume is usually the barrier. We may have the capacity to produce as many products or as many units as possible. However, we don't have control over what the customer will buy. For example, look at the online class. This online class, we have capacity to accommodate 100 students. The online class, we have paid Zoom to obtain the license to be able to accommodate 100 students in a class. That means the capacity, our production capacity, we can accommodate 100 students. But we don't have control over the number of students that we apply for this online class. We have run advertisement on the social media. We have sent to our previous students, but we only have like 15 students in this class. That means we have capacity to accommodate 100. But we only have like 15 students enrolling for the class. The volume of students now is a limitation to maximizing our profits. As a business organization, if we have gotten 100 students, that is better for us. We can accommodate 100. In this particular case, the sales volume, that is the number of enrollments, becomes a bottleneck to making more profits. What is bottleneck? What is bottleneck resource? Bottleneck resource is any activity that limits an organization from making more profits. Bottleneck resource is any activity or any process that limits a business organization from achieving more profit. You can also define bottleneck as an activity which has a lower capacity than the preceding or subsequent activities. The activity that has a lower capacity than the preceding activities or subsequent activities, thereby limiting throughput. What is throughput? Please note, throughput is the difference between your sales price and material cost. What is throughput? Or what is throughput return? At times, the examiner may call it throughput, or the examiner may call it throughput return, or the examiner may call it throughput contribution. Your throughput contribution is calculated as the sales price less material cost. The objective of the theory of constraint is to maximize throughput contribution, while at the same time minimize conversion costs and investment costs. I'll take that again. The overall objective of the theory of throughput is to find a way to maximize the throughput contribution. That is, maximize your sales revenue less material cost, while at the same time the company should try to minimize the conversion cost and the investment cost. Now we have explained throughput. Sorry, we have explained the theory of constraints. Our next discussion. The concept of throughput. The concept of throughput accounting. The concept of throughput accounting has been developed from the theory of constraint as an alternative system to cost and management accounting in a just-in-time production environment. I'll take that again. The concept of throughput, accounting has been developed from the theory of constraints as an alternative system to cost and management accounting in a just-in-time manufacturing environment. This theory focuses on maximizing throughput return, subject to bottleneck results. Under the concept of throughput accounting, it is assumed that the only variable cost is the material cost. Please note this. Throughput accounting assumes that material cost is the only variable element of cost. All other costs are assumed to be fixed, except the material cost. This concept is based on the philosophy that please just 1 minute. Now let's go on with the class. The concept of throughput accounting is based on the philosophy that all costs are fixed except the material cost. For example, to achieve production, the company will buy a factory. The purchase cost of the factory is fixed. Thereafter, the company will buy production equipment. The purchase cost of the production equipment is also fixed. The company will hire labor, and labor will negotiate monthly or annual package. The labor salary paid monthly is also fixed. The monthly salary of the employees is also fixed. Then we now introduce raw material to the factory so as to achieve production. So in modern manufacturing environments, most costs are fixed in nature. In modern manufacturing environments, labor cost is fixed in nature. Factory cost is fixed in nature. Equipment cost is fixed in nature. The only cost that will vary with the volume of production is the material. Alexia, I can't understand this comment, but why, sir? So this concept of throughput accounting assumes that all production costs are fixed except the material cost. Hence, if you are trying to maximize your profits, then you are going to work on your sales price and your material cost. You don't have control over the staff salary because the salary is fixed. You don't have control over the equipment cost. This is fixed. You don't have control over interest payable. The interest payable is determined by the lender. So in modern manufacturing environment, most cost is fixed in nature. Hence, only material costs vary in direct proportion with the volume of production. This is the concept of throughput accounting. Well, this contradicts marginal costing. Please note, marginal costing is under the traditional concepts. Marginal costing assumes that labor costs vary, but in reality, in modern manufacturing environments, labor cost does not vary with the volume of production. The employee salary is fixed. So please note this. All right. Our next discussion. Throughput accounting as a performance measurement tool. What we are trying to discuss here is we can use throughput to assess the performance of individual products in a multi-product environment. In a multi-product environment, we can use the concept of throughput to assess the performance of individual products. To do this, we have different performance measures. One of them is return per factory hour. This should be factory. Not factor hour. Return per factory hour. Return per factory hour is calculated as sales less direct material cost. That is throughput return. I want to remove this, please. I'll just put throughput return. Throughput return divided by usage of bottleneck resource in hours. The usage of bottleneck resource in hours. Then you can also calculate throughput accounting ratio. The throughput accounting ratio is calculated as return per factory hour divided by cost per factory hour. Return per factory hour divided by cost per factory hour. This is better. Your cost per factory hour is calculated as total factory cost divided by total time available in bottleneck. In bottleneck result. This is better. Your cost per factory hour is calculated as total factory cost divided by time taken or total time available in bottleneck result. Note, your total factory cost is equal to all production cost. All production costs less except material cost. Your total factory cost refers to all production costs except material cost. We can use this ratio. We can use our throughput accounting ratio to determine products that contribute more profit to the organization. We can use the throughput accounting ratio to identify the products that is contributing more profits to the organizational profits. We can also use this ratio to identify products that is generating loss for the company. In other words, throughput accounting can be used as a performance measure to assess the performance of individual products in a multi-product organization. Please note that our next discussion, throughput accounting and decision making. Please just 1 minute. I'll be back in 1 minute. Then we shall discuss throughput accounting and decision making. Please just 1 minute. If there's no question, we move to throughput accounting and decision making. We can use the concept of throughput. Okay, Alexia, let's have your question.
Just want to ask if who is using this throughput accounting?
Who is using it?
Yeah,
Any
it's-
manufacturing company can decide to adopt throughput.
but usually I mean, in reality now, are they using this much more than the
Okay,
traditional one?
let me ask you. Are you privileged to work in production environments?
Maybe sa in a future,
I can't get that, sorry.
maybe sa in a future.
Please, can someone decode what she's saying? I
Hello,
said, are
sir.
you in?
Hello, sir.
Yes.
She said maybe in the future.
Oh, maybe in the future. Okay. Now, that's fine. As an accountant, you may be asked, you may be the first accountant that will set up the accounting system for your company.
Okay,
Now, you are not going to look at your company business process and ask yourself, which costing system will fit into this my company? Now imagine yourself in an environment that is in a production environment that is driven by technology largely. Imagine yourself that you find yourself in a production environment that is driven by technology, less
okay.
human being, more of machine, more of IT technology. Now
Is there
that means
any, sorry, is there any software is existing now?
it's not impossible. Okay,
Okay,
it's not impossible. If you look at, even if you look at automobile industry, in the production environment, to produce a car, it is largely driven by machine and technology.
yes,
That means we have less human being. It also means that most of the costs we are going to incur might be fixed in nature, except the material cost. Now, you are going to look at, assuming you find yourself being the first accountant in a company, you will try to understand the company business process. Then you now ask yourself, which accounting system or which costing system can I introduce that will be appropriate for this business? The management will rely on your expertise to advise them on the costing system that you think will be appropriate for our business process. What ICAN will teach you is to expose you to the different costing system. You are going to learn the different costing system that is available. But in your company, you might be using just one or two that is appropriate or that suits your company business processes. So
but
if you are
sir,
being
this one is totally like like a confusion to what we have learned the whole time.
okay,
It's like because of the concept that they have inside. It's like in psychology, it's like this one is like a reverse, you know, something
Yes,
else.
in fact, it's even good you brought it up, really. At the start of this particular topic,
Welcome on
I
board.
tried to bring the traditional costing system
Uh,
and the modern costing system.
mm-hmm.
And I tried to explain that modern costing are developed to correct some of the deficiency of the traditional costing system.
Mm,
Now, if you look at under marginal costing, if you are trying to calculate your contribution, you are going to take all the variable costs. Labor
mm,
cost is assumed to be variable under the concept of marginal costing. Now, under the concept of throughput, labor cost is categorized as a fixed cost.
okay.
And you may ask yourself, in reality, most of us were salary earner,
Yes.
and the salary is fixed.
Yes, sir.
The question is your labor cost, does it vary with the volume of work you do in your office?
No.
No,
The answer is no.
but in manufacturing, sir, it's a they will call it wages now.
Good. In manufacturing environment, we have two categories of employees. We have the direct production staff.
Hmm.
We now have the indirect staff. Now, the
Yes,
direct
sir.
production staff, those are the staff that work in the production factory. Now, if you now look at the total wages of the company, you observe that the direct production staff that is being paid based on volume or per hour,
Hmm.
their salary or their total wage is small compared to the total salary paid to the indirect staff.
Yeah.
That means the majority of the labor cost is fixed in nature. Only few percentage or small percentage of the labor cost that is paid to the direct worker, that is variable in nature. Now imagine yourself as the accountant. You have a labor cost of total salary for the month, say 100 million. Total staff salary, 100 million, 100 million naira. Out of this 100 million, 5 million naira is for the production factory worker. 95 million naira is for the indirect office staff. Now, how are you going to treat the labor cost? The majority of the labor cost is fixed in nature. In modern manufacturing environments, most of the cost is fixed in nature. And that is what this modern costing system is trying to bring the reality on ground to the table. All right, let's move back to the topic. So, in summary, is that it's good you try to figure out which company
Sir,
uses,
sorry, sir.
okay,
It's like this constraint is can use in linear programming, ba?
in linear programming.
Yes, sir.
I'm trying to get that. that we can use this,
You know,
constraint
if
in
this
linear programming.
constraints, if this constraints is equivalent to limiting factor, right?
Oh, okay, okay. Yeah, I'm still coming to his.
So
I'm still
that
going to
that
explain.
means if you have more than one, or like say now, like more than one, you are using this linear programming now.
I'm still coming to that, please. I'll still get to
Okay,
it. Is that clear, please?
okay,
All
okay,
right.
sir.
Thank you, Alexia. All right. Now, we are trying to explain that we can use throughput accounting to guide decision making. The concept of throughput accounting can be used to determine optimal production plan. The concept of throughput accounting can be used to determine the optimal production plan. When there is a single bottleneck resource, let me take that point. The concept of throughput accounting can be used to determine optimum production mix. Where there is a single bottleneck resource, we can identify the optimum production plan. Now, to do this, what is optimum production plan? Optimum production plan is the production plan that will maximize profits. When a company is faced with a single binding constraint or bottleneck, optimum production plan is the production plan that will maximize the profit of a company when a company is faced with a single binding constraint. In a multi-product environment, when we say multi-product, where a company produces more than one product, maybe 2, 3, 4, 5 products, maybe 2, 3, 4, 5 products. We can use, and there's a limit, there's a limiting factor. Your limiting factor is also called the bottleneck resource. Under limiting factor analysis, we call it limiting factor, the binding constraint. Under the concept of throughput, it is known as the bottleneck resource. We can use the throughput accounting ratio to identify the optimum production plan. Then the last discussion. Relationship between throughput accounting and limiting factor analysis. Relationship or comparison between the throughput accounting and limiting factor analysis. In limiting factor analysis, The contribution per unit is calculated for each product. Contribution per unit is calculated as space less all variable cost. In limiting factor analysis, contribution per unit is calculated as your sales price minus all the variable costs. Thereafter, contribution per unit of scarce resource is calculated. The scarce resource is the limiting factor. Thereafter, the contribution per unit of scarce resource is calculated. And this is used to determine optimum production plan under limiting factor analysis. In throughput accounting, a similar calculation is performed. In throughput accounting, a similar calculation is performed. However, this is not contribution per unit of scarce resource, but throughput return per unit of bottleneck resource. Throughput return per unit of bottleneck resource. Throughput is calculated as selling price less direct material cost. This is different from the calculation of contribution, in which both the variable cost and both the variable material cost and other variable overhead are deducted from the selling price. Please try to understand the explanation here. Please, it was texted 2023 diet. The examiner says, explain the relationship between limiting factor analysis and throughput accounting. Please, you must be able to explain this to the examiner. Now, in final analysis, please listen to this aspect. In the exam, if the examiner is texting a single bottleneck resource, a single limiting factor, you can use throughput accounting to identify optimum production plan. If in the exam, the examiner is texting, the examiner says a single binding constraint or bottleneck, then you are going to use throughput accounting to determine your optimal production plan. Or you can use limiting factor analysis to determine your optimal production plan. Secondly, if you have two bottlenecks Alexia, please hold on. If in that question you have two bottleneck resources, in that case, you cannot use limiting factor analysis. You can use throughput accounting ratio. You are going to use linear programming to determine optimal production plan. Linear programming is meant for two constraints. Linear programming is designed for two limiting factors or two bottleneck resources or two constraints. Number 3, if you have more than two constraints, please hold on, Alessia. If you have more than two constraints, then you cannot use linear programming again. You can only use simplest algorithm. Once the limiting factor is more than 2, then you can use linear programming. You are going to use simplex algorithm. Please keep this with you. Good enough, your syllabus does not cover simplest algorithm, so that will not be texted. Yes, Alexia, we can take your question now.
So, sir, only in this throughput accounting difference is this labor, right? We are not putting it as one of the variable costs, right?
No, the only difference is that under throughput accounting, material cost is the only variable cost.
Yes, but he just said in other variable overheads are also deducted from the selling price.
Under throughput, the only variable cost is the material cost. Then, if you want to calculate, but under limiting factor analysis, labor cost is part of variable cost. Other variable overhead is part of variable cost.
Yes, yes.
Is that clear, please?
Yes, sir.
All right, Mr.
But
Oliver.
in the
Yes, sir.
throughput, sir, you see, no?
Okay, Alessia, continue.
The last part, sir, this is different from the calculation of contribution, in which both the variable cost and other variable overheads are also deducted from the selling price.
Yeah, that's correct. Both the
So
variable
that means
cost.
not only labor is not included there, no? In throughput.
In
Is it?
throughput, the only variable cost is your material cost. All other costs are fixed in nature.
Okay, so this one is just confusing something.
I can't understand the confusion.
Because of that word, in which both the variable costs and other variable overheads are also deducted from the selling price.
That is okay.
Okay,
Wait.
he just
Okay.
want
Okay,
want
please
to
hold on.
compare limiting.
Okay, please hold on. Let me hear Oliver.
Yes, sir. Thank you. You said when a problem is given to us and we only have one limiting factor or constraint, as the case may be, either the throughput accounting approach, cost accounting system, or the limiting factor analysis could be used to determine the optimal production mix.
Correct.
Yeah. Now, if we use any of them, are we likely to get the same answer?
First is that examiner will specify which one to use.
Okay.
That is first. Secondly is that you will not get the same answer.
Okay.
Because the assumption differs.
Okay.
The assumption of throughput accounting is that only material cost is the variable cost. While the assumption of limiting factor analysis, material cost is a variable cost, labor cost is a variable cost, other variable overhead, they are also part of variable cost. And all these variable costs will be deducted from the selling price to arrive at contribution per unit.
Okay. But we are sure of getting the production mix to be correct for both methods.
You are going to get the production mix correctly.
Correctly.
But the answer will not be the same. But the
answer will be different because of the approaches. Okay. All right.
Because of the assumption.
The assumptions. Okay. All right. Thank you very much, sir.
Yeah. So, okay. Alexia.
I got that one now, limiting and the throughput accounting. But when we solving this optimal production plan, of course, this throughput accounting, you will get the throughput return higher compared to limiting factor on the contribution per unit there. Is it?
Yes, it will be higher because we are not taking.
And also, we are just allocating now which one because the two aim of the two is to maximize profit, right?
Yes, please.
To maximize the profits. That means if to maximize the profit, so we still the same. We still know the ranking. I guess they will just have it.
Okay, just you know what? By the time we are solving questions, we are still going to do the ranking.
Oh.
We are going to rank the products because there is a bottleneck. What do you say?
Is it same, sir? The ranking? Say ranking of the throughput and the ranking of the limiting.
Okay, it is better to actually apply questions. In fact, question will reduce this by the time we solve question, that would minimize this it should remove this confusion you're having.
And what's the benefits of using this one? I don't really
Which one is that?
This throughput.
What is the benefit of taking throughput? Compared to limiting factor? Was that your question?
Yes.
Okay. The major benefit is that it addresses the concern of modern manufacturing environments.
Okay, modern manufacturing.
Yes, in modern manufacturing environments, most cost is fixed in nature, except material cost.
Which is standard this one is following, sir?
I didn't get that part.
Which accounting standards is following by this throughput?
Accounting standard recognizes absorption costing as a basis for preparing your financial statements.
Uh-huh. Okay.
Is that clear, ma?
Okay now.
However, management accounts is to address internal concern of individual company, while financial accounts is to address the external need of the organization. So we are dealing with management accounting. How do we address the individual peculiarity of companies? You might find yourself working in IT firm. IT firm has its own peculiarity. Oliver might find himself working in the banking sector. Banking sector has its own peculiarity. The costing system used by bank will not be the costing system used by the IT firm.
Sure.
Because each company will identify the costing system that is appropriate to address its internal what? Internal business processes.
That
But if
means
you are
it's not
preparing finance, oh,
policy, sir. It's like an estimate. Is it a accounting policy or it's just like an accounting estimate?
is individual company business to determine your
Okay.
own internal accounting system.
I rest my
Whatever
case.
you think is good for your company, you are going to decide. Standard will not decide for you what to use.
Okay. Just a guide.
The only time standard will decide for you is if you are reporting your financial statements.
How you present. Yeah.
Is that clear, ma?
Yes, sir.
All right. Any other question? All right. If there's no question, let us look at question number 1. You can check your soft copy material. That should be on page 150. Page 150 of the study of our soft copy material. We are looking at that page. You are going to have question 8, solar system and co. Solar systems, solar system co. Let us take this question. It's a very interesting class. It's very interesting class. Very participative class, that's fine. All right, please refer to this page 150. Of our study pack. Am I correct?
Yes, sir.
I'm correct, right? Page 150, right?
Yes, sir. Page 150.
All right, let's go to it. Let's just 1 minute. Let me respond to this. All right. I'll read. Solar system and Co. makes two types of solar panel at its manufacturing plant. Large panels for commercial customers, small panels for domestic customers. All panels are produced using the same materials, machinery, and a skilled labor force. Production takes place for 5 days per week. Please note that. Production takes place 5 days per week from 7 a.m. to 8 p.m. in bracket 13 hours, bracket close. 50 weeks of the year. Each panel has to be cut, molded, and then assembled using a cutting machine C, a molding machine M, and an assembling machine A. As part of a government scheme to increase renewable energy success, solar systems as guarantee not to increase the price of small or large panel for the next 3 years. Please note that selling price will not be increased for the next 3 years. It has also agreed to supply a minimum of 1,000 small panels each year to domestic customers for this 3-year period. Also note that the company has agreed to supply a minimum of 1,000 small panels each year. Whether small panel is profitable or not, the company has promised to produce and supply 1,000 small panels each year to domestic customers for this 3-year period. Next paragraph. Due to poor productivity levels, late orders, and declining profits over recent years, the finance director has decided to, has suggested the introduction of throughput accounting within the organization, together with a just-in-time system of production. Material cost and selling prices for each type of panel as shown below. Selling price per unit is given for both panels. Material cost per unit is also given. Total factory cost, which include the cost of labor and other factory overhead are 12 million naira each year at the plants. Out of the 13 hours available for production each year, workers take 1 hour lunch break. For the remaining 12 hours, machine M is utilized, machine C is utilized 85% of the time. Machines M and A are utilized 90% of the time. The unproductive time arises either as a result of routine maintenance or because of staff absenteeism. As each machine needs to be manned by skilled workers in order for the machine to run. The skilled workers are currently only trained to work on one type of machine. So workers can only work on one machine. Maintenance work is carried out by external contractors who provide a round-the-clock service. That is, they are available 24 hours a day, 7 days a week, should it be required. The following information is available for machine M, which has been identified as the bottleneck resource. Please note that examiner says machine M is the bottleneck resource. Large panel, hours per unit. Let me explain this. To produce a unit of large panel, you require 1.4 hours of machine M. While to produce a unit of small panel, you require 0.6 hours of machine M. If you want to produce 1 unit of large panel or machine M, you are going to take 1.4 hours. And for small panel, you are going to take 0.6 hours of machine M. There's currently plenty of spare capacity on machine C and A. Oh, I've gone too far. Requirements. Requirements A. Calculate the throughput accounting ratio for large panel and for small panel, and explain what they indicate to solar systems about the production of large and small panel. Let us start with requirements A. Examiner says calculate throughput accounting ratio. You now go back, you now flash back. What is the formula for throughput accounting ratio? If I'm to solve this question, I'm going to keep the formula somewhere. The formula will be a guide. Throughput accounting ratio is calculated as what? Return per factory hour divided by cost per factory hour. If there's no question, let us go to this solution. Our suggested solution page. Let us try to see how to deal with this. Okay. Let's pick our pen. Please ensure the question is open on your system. Also ensure you have your calculator closer to you. We only have 1 hour remaining. So the question says, A, calculation of throughput accounting ratio. Okay. So I'll move down a bit. Oh, my pausing is. I have to pause the class. I'll take this off. So I'll move down a bit. I want to state the formula down. First, throughput accounting ratio is equal to return per factory hour divided by cost per factory hour. Okay. I'll come here, go down small again. Return per factory hour is equal to throughput return divided by time taken in bottleneck restores. Next, cost per factory hour is equal to total factory cost divided by total time. Available. Please, can you mute?
Madalas po kasama ko po ang tatay ko na gumagawa or nag-work out, nagbabasket. Actually po, nagturo sa akin na mag-basketball.
Alexia, please, can you mute? Thank you. Total time available in bottleneck. Total time available in bottleneck resource. Then remember, don't forget your throughput return is equal to sales price minus material cost. Now, once you state out all the formula required, you can now go back to compute our throughput accounting ratio. I'll come here. Can underline this. The products large panel, small panel. Okay. You start with your selling price. Please refer to the question. What is the selling price for the large panel?
12,600.
12,600. Selling price for small panel?
3,800.
3,800. Then less material cost. Material cost for small panel, for large panel, how much?
4,300.
4,300. Small panel, what is the material cost?
1,160.
1,160. Now get your throughput return. This will give us our throughput return per unit. What do you have here?
8,300.
8,300. What do you have here?
2,640.
26.
640. Good. We have gotten return. We have gotten throughput return. Next, the bottleneck. Bottleneck. And the bottleneck resource is machine M. Machine M is the bottleneck. Now go to machine M. What is the hours required? What is the hour in bottleneck? Time taken in bottleneck. What is machine N hour? Required to produce a unit of large panel.
1.4.
1.4 hours. What is machine M hours? Required to produce the small panel.
0.6.
0.6 hours. You can now get return per factory hour, return per bottleneck resource. Your return per factory hour is also the return per bottleneck resource. Look at it, return per factory hour. To do this, throughput return divided by time taken in bottleneck. 8,300 divided by 1.4. What do you have, please?
5.93.
5928.57.
5928.57. Thank you. Then, what is the second one? Return per
4,400.
What do you have, please? 4,000?
400.
400. This is the return per factory hour. It's also called return per bottleneck resource. The bottleneck resource is the machine hour.
Yes.
The question says machine M has been identified as the bottleneck resource. So if you go back to the formula, you have gotten return per factory hour. You have gotten return per factory hour. Look at it, please. Throughput return divided by time taken in bottleneck resource. Next is to get cost per factory hour. Now put it here. I need to calculate cost per factory hour. What is the formula for this?
Factory cost.
The formula is, look at this, total factory cost divided by total time available in bottleneck resource. So we are going to do this working. First, what is the total factory cost? Look at the question, please. Total factory cost.
12 million.
Thank you. The question says total factory cost is 12 million naira. You have the factory cost. Next, total time available in bottleneck resource. Next, total time available in bottleneck resource. And that is in brackets machine. Machine M is the bottleneck resource. Machine M is the bottleneck resource. We now need to calculate this. Now, please let us refer to the question. We can explain this to ourselves. I'm going to refer to the question that we can try to explain how to bring this time out based on this question we are dealing with. Okay? Now look at this. The question says, production takes place for 5 days per week from 7 a.m. until 8 p.m. That is 13 hours. 50 weeks of the year. All right? Also, the question says, look at these aspects. Out of the 13 hours available for production, each day, workers take a 1-hour lunch break. That means 12 hours is for production. Out of the 13 hours, 12 hours is for production. In a day. Continue. Machine C is utilized 85% of the time. Machine M and A are utilized 90% of the time. Our concern is the bottleneck resource, machine M. Machine M is used 90% of the time. The unproductive time arises as a result of routine maintenance or because of staff absenteeism. So I can go back now. So 12 hours is available for work in a day, 5 days a week, 50 weeks for a year. So what is the total hours available?
3,000.
Yeah, that's great. Alexia. So you can work that out. All right, let's go and show the working. Let's show the workings. So I'll come here. Working hours per day, excluding lunch. Working hours per day, 12 hours. Five days per week. Therefore, working hours per week is equal to 5 multiplied by 12 hours. That's 60 hours. 50 weeks per year. Therefore, working hours per year, yes, is equal to 60 hours multiplied by 50 weeks. That's 3,000 hours. Is this clear to all? Now, examiner now says machine M is available 90% of the time. The time in a year is 3,000 hours. But machine M, the bottleneck resource, is utilized 90% of the time. So total time available in bottleneck resource is equal to 90% of the time. 90% of 3,000 hours. This is equal to 2,700 hours. This is the time available in bottleneck. You can now compute your cost per factory hour. Cost per factory hour is equal to, per factory hour is equal to total factory cost, 12 million, divided by time available in bottleneck, 2,700 hours. Please divide. That will give you cost per factory hour. Yeah, thank you. 4,444.44. This is equal to 4,444.44. That is the cost per factory hour. You can now return to your calculation above. You can return to your calculation above. All right, just come here. The cost per factory hour, 4,444.44. Cost per factory hour, 4,444.44. You can now compute the throughput, accounting ratio. Divide return per factory hour by cost per factory hour. What do you have, please? This should give you 1.33, 0.99. You have calculated the throughput accounting ratio. Any question, please? Any question, please?
Yeah, sir, for me, it's well understood. Maybe we should forge ahead. That's for me.
All
I
right.
don't know any other person.
Okay. Now, the part of question A says, explain what throughput accounting ratio indicates or means to the company. Please listen to this explanation. If the throughput accounting ratio is greater than 1, if the throughput accounting ratio is greater than 1, this implies that the product is generating more revenue from sales than cost incurred. If the throughput accounting ratio is greater than 1, it implies that that particular product is generating more revenue from sales than the cost incurred for the product. Hence, the product is profitable and the company should produce more of that particular product. Alternatively, if the throughput accounting ratio is less than 1, alternatively, if the throughput accounting ratio is less than 1, it means that the product is incurring more cost than the revenue generated. The product is incurring more cost than the revenue generated from the product. Such product is not profitable. The company may consider disregarding such products. Now, if you look at the calculation above, large panel has an accounting ratio of, has a throughput accounting ratio of 1.33. This implies that large panel is profitable, and the company should continue to produce more of large panel. Small panel with 0.99 throughput accounting ratio means that the product is not generating sufficient revenue. The product is incurring more cost than the revenue generated. Hence, the company may consider improving its material cost management or stop the production of small panel because it is not profitable. That is the expected explanation to the examiner. Oh, excuse me, please. Requirement B. Requirement B. Assumes that your calculations in part A above. Your calculation in part A have shown that large panels has a higher throughput accounting ratio than small panel required. Using throughput accounting ratio, using throughput accounting, prepare calculation to determine the optimum production mix and the maximum profits of X and Co for the next year. We want to use throughput accounting to determine the optimal production mix. Once you have calculated your accounting ratio, your throughput accounting ratio, this can be used to determine optimal production mix. You can just go to the requirement B. Go to requirement B. Solution. Just come here. B. Determination of optimum production mix, and the maximum profit. Maximum profit. You have your products. Large panel, small panel. Then pick your throughput accounting ratio as computed in A above. Accounting ratio. This is 1.33, 0.99. Now ranking. The next one is ranking. First, second. Next, we have done the ranking. Then the next step is allocation of available bottleneck resource in bracket machine M. Sorry, machine M. Machine M. Available hour for machine M, total hour 2,700 hours. This is the hours available in bottleneck. Now, if you refer back to the question, I will refer you back to it. From this ranking, we should start with large panel first. Based on the ranking, the company should produce large panel first. When you are done with the production of large panel, when you have exhausted the total production of large panel, you now move to small panel, because small panel ranks second. But there's a condition in the question. There's a particular condition in that question. Let's go to that question. Yeah, look at it. As part of a government scheme to increase renewable energy sources, solar system and co has guaranteed not to increase prices for small or large panel for the next 3 years. It has also agreed to supply a minimum of 1,000 small panels. That means the company has agreed to produce a minimum of 1,000 small panels. Whether small panel is profitable or not, That means we must start with the condition first. The allocation of hours, we start from the condition. You can go back up quickly. Let's take this up. I'm trying to get to the page. Okay? And now come here. So your allocation will start with the condition first. We must produce a minimum of 1,000 small panels. Now come here. Minimum guarantee. That is small panel. $1,000 units. Now go check. What is the machine M hours required to produce 1 unit of small panel? What is the machine M hours required to produce a unit of small panel? Hello?
That's 0.6.
Good. Now 0.6. Now if you want to produce 1,000 small panel, how many hours do we require? That is multiplied by 0.6. Is that not?
Yes, sir.
So we require 600 hours to meet the minimum guarantee. Now, out of 2,700 hours, we are going to take 600 to produce minimum guarantee small panel. Then we are left with what? Remaining hours. Remaining machine M hours. Machine M hours. 2,700 minus 600. That becomes 2,100 hours. Now you now go to, now start with the ranking now. The first rank, fixed large panel. Now go check the question. What is the demand for large panel?
Sir?
Are we giving the question?
Breako.
Let me check. So that
It's breaking.
Yeah, it's there. Maximum demand. Maximum annual demand for large panel and small panel. 1,800 units for large panel, 1,700 units for small panel. So we need to produce large panel first. And we have the maximum is 1,800. Go back to our calculation. All right. Now, the maximum demand for large panel is 1,800 units. So we need to produce large panel. And to produce a unit of large panel, we require how many hours of machine M?
1.4.
Thank you. 1.4 hours of machine M. 1.4 hours of machine M. Now, if you want to produce 1,800 units of large panel, what is the total hours required?
That will be much. 1.4 to 520.
Thank you. We require 2,520 hours. But we only have 2,100 hours remaining.
Yes, sir.
That means we cannot produce 1,800 of large panel.
No.
Great. Now, how many can we produce?
1,500.
Now come here, look at it. You can calculate that like this. Look at the calculation. You have 2,100 hours. To produce 1 unit, we require 1.4 hours. How many large panel can we produce? We can only produce 1,500 units. Hour per unit, 1.4. This will give me, look at, this is equal to
620 lang.
This is equal to 1,500 units. This will now give me back 2,100 hours.
Yes.
That means remaining hours will be used to produce large panel. No more hour again, 0. So the optimum production plan, large panel, we are going to produce 1,500 units. Small panel, we are going to produce 1,000 units. Look at it. Optimum production plan, that is large panel. Large panel, 1,500 units. Small panel, 1,000 units minimum. That is the optimum production plan or optimum production mix. They look at optimum production mix. Now you can now calculate the maximum profit. The maximum profit, maximum profit, the maximum profit. Calculation, maximum profit calculation. You have your product. Just come here, large panel. We produce 1,500 units. Small panel. The company produced 1,000 units. Now, let's go to calculation 1. What is the return per unit? Calculation 1. Calculation 1. Look at it, please. Throughput return per unit, 8,300, 2,640. The throughput return per unit, 8,300. For large panel, 2,640 for small panel. We can return to our calculation. Now come here, multiply by throughput return per unit, 8,300, multiply by 2,640. Please calculate. This will
12
give me
million.
12 million, 450,000. This 2,640,000. Then get your total return.
50,090,000.
50,090,000. Then less your total factory cost.
12 million.
12 million.
Remaining
Therefore,
3,090,000.
maximum profit 3,090,000. This is the maximum profit. Maximum profit. All right.
Sorry, sir.
Yes, ma'am.
If like this, I can jump into that calculate determination of optimum product mix. I can just jump up to this throughput accounting ratio immediately, or I still need to show the same like A.
No. Just pick, since you have calculated that in A. So just pick your calculated ratio, the throughput accounting ratio, then do your
Directly, huh?
ranking. You don't need to start wasting time again.
Okay.
All right.
Okay now. Yes, sir.
So let's look at the C part so that we can round up and go for tonight. The C part of the question. Suggest and discuss 3 ways in which S and Co could try to increase its production capacity and hence increase throughput in the next year. without making any additional investments in machinery. Suggest 3 ways in which the company could try to increase its production capacity and hence increase throughput without making any additional investments in machinery. Now let me explain this question to you. The company cannot meet maximum customer demand. For example, 1,800 units of large panel is demanded by the customer. The company can only produce 1,500 units of large panel. As a result of bottleneck resource, machine M. This implies that customers are willing to buy the company's product, large panel, but the company cannot produce large panel again because of bottleneck. Now, the question says, suggest ways in which the company can improve its production capacity and increase its throughput without making additional investments in machinery. What would be your suggestion? Now, the answer to this question is also in the question. The answer to this question is also in the question. One is ten percent of the time is lost to routine maintenance and staff absenteeism. That means if you are trying to improve your production capacity, you need to think of maintenance work being conducted during weekends or during off production hour. Production hour is between 7 a.m. to 8 p.m. Therefore, the company should carry out maintenance work outside the production hour, or the company can consider weekend work. That is one option. Number 2 option. What about the 1 hour lunch break every day? 1 hour lunch a day in a week, that is 5 hours lost to lunch. In a year, 250 hours is being used for lunch. We can suggest that the company should consider staggering the lunch. a staggered launch, where the workers will go on launch in batches. In such a way that the production will not stop, even if staff goes for lunch. So the company can introduce a staggering launch. You can look at that option. Then the third option is the company should train employee to be able to work and operate more than one machine. The employees should be able to work on more than one machine. These are the ways of increasing productivity. All right. Let me go to any question, please.
Nothing.
All right. I will share. I want to copy that aspect of the question and share with the group so that we can round up. Solar system and co. The solution to C. So if you are looking at the working notes, please let us read through this requirement C explanation. Please, if you are going through the working notes, let us read the solution for C. Let me even copy like, okay. Oh my God. Not be much. No. Okay, let me see this. Yes, Alexia.
So it means that every time we do calculation, we need to do some explanation to it, like assumptions.
No.
No need.
This question requires you to explain this.
Okay.
Requirement C say we should explain. So we have to
Okay.
explain. Is that clear, Alexia?
Yes, sir.
We are explaining because, look at it now. Look at it, please. This is the expected explanation. Look at it. Suggestions to increase machine M capacity as follows. Machine M is currently only fully functional 90% of the time. This means that 300 hours are lost while the machine is maintained or workers not available to run the machine. If the maintenance could be carried out outside the usual working hour, either before 7 a.m. or after 8 p.m., some additional time could be freed up. This is possible. This should be possible since we are told that maintenance contract works round the clock. Point 2, workers could be trained to use more than one machine. This will mean that if some workers were absent, one of the other workers could step in and work on the other machine in order to keep production running. Again, this will help to keep the lost 300 hours productive. Where is this 300 hours coming from? Remember, we calculated 3,000 hours available for machine M. But machine M is only available 90% of the time. 90% of 3,000. We got 2,700. That means out of 3,000 hours, only 2,700 is available for production because of routine maintenance or staff absenteeism. It means that annually 300 hours is lost to machine maintenance and staff absenteeism. So please let us pray through. I'll stop here. Any question?
Nothing, sir.
All right.